Welcome back, traders. I'm Isaac Martinez, market analyst at xChief, and in today's market breakdown, we are diving into the most critical news moving Wall Street right now, from Palantir's record earnings to Trump's latest tariff threat against India. Plus, we will look at how the Fed's next move could shape your trading strategy. Let's get straight into it. We will start with the economic calendar, and the hours you are going to see right now are based on GMT-5 related to the New York trading session. This week kicks off with important data from the services sector in the US on Tuesday at 8:45 a.m. We have the S&P Global Services PMI for July. This indicator tells us how the services sector is performing. Things like restaurants, banks, and transport. A reading above 50 shows expansion, meaning businesses are growing. Then at 9 a.m. we get the ISM non-manufacturing PMI, which is another key measure of service sector activity. It's important because the US economy is mostly service-based. If the number is high, it means the economy is still strong. At the same time, we will see the ISM non-manufacturing prices, which tells us whether service providers are paying more for materials and labor. This is a useful hint for inflation, and traders watch it to anticipate how the Fed might react. Moving on to Wednesday at 9:30 a.m., we'll get the crude oil inventories report. This shows how much oil the US has in storage. If inventories go down, it often pushes oil prices up, and this can affect inflation, energy, stocks, and even currencies like the Canadian dollar. Later that day at 12 p.m., the 10-year note auction will take place. This shows investor demands for US government debt. If demand is low, yields go up, and that can pressure tech stocks and push the dollar higher. On Thursday at 7:30 a.m., we'll see the initial jobless claims. This is a weekly report on how many people filed for unemployment. It's a quick way to check how healthy the job market is. A low number usually supports risk assets. Finally, at 12 p.m., we'll watch the 30-year bond auction. Just like with the 10-year, this reflects market sentiment about long-term interest rates and inflation. Strong demand can mean confidence in the US economy. Weak demand might signal concerns. Now let's continue with the most important fundamentals of the week. We will start talking about US stock futures because they are pointing higher, suggesting a possible continuation of the rebound we saw at the start of the week. Despite ongoing concerns over the state of the US economy after last week's weak jobs data, optimism is being supported by strong corporate earnings and rising expectations for a Federal Reserve interest rate cut in September. At the moment, the probability of a rate cut next month is hovering around 90%, a significant jump from just 63% a week ago. Meanwhile, President Donald Trump has launched a fresh tariff threat targeting India over its continued purchases of Russian oil. He mentioned potential tariffs of up to 100% on major buyers of Russian crude, including both India and China. His stance toward Russia has become more aggressive following the breakdown of ceasefire talks in Ukraine. Despite the pressure, India has made it clear it will keep importing oil from Russia, citing long-term strategic and economic ties. As a result, some market participants are now expecting India's central bank to cut interest rates later this week. On the corporate side, Palantir shares surged in extended trading after the company posted its highest quarterly revenue since going public. Strong demand from governments and companies for its AI-powered solutions drove the jump in sales, with over 40% of revenue coming from US government contracts. Palantir now expects full-year revenue to reach between 4.14 and 4.15 billion, well above previous forecasts. Also on Tuesday, investors will be watching earnings from Caterpillar, a key economic bellwether, and Pfizer. After the closing bell, attention will turn to chipmaker AMD and its latest financial results. We now begin with the analysis of the most important assets, and as always, we start with the strength of the US dollar, represented by the DXY index. There are a few key points we need to consider. On the 4-hour chart, we've seen a decline of approximately 1.66%, where the dollar has found a support zone around 98.595 points. From this area, it's very likely that the price may attempt a bullish move especially after collecting liquidity, provided this zone has enough demand to support a rebound in dollar strength. If that's not the case, we could see a deeper decline in the dollar, and that would mean that bearish targets may remain in play. Some of those downside targets based on price action include the 98.436 level as the first potential support break, and if that zone fails, we could head lower toward the 97.869 level as a second bearish target. On the other hand, if the dollar resumes an upward move, we could look to fill the imbalance created after the recent drop. The area with the highest probability for reaction sits around 99.569 level. Personally, I would lean toward a cautiously bullish outlook for the dollar. However, since the bullish momentum appears to be weakening, we must be aware that the scenario could shift from bullish to bearish with increasing probability. Now let's move on to the S&P 500, one of the key assets we also trade and analyze here on the channel. What's important to focus on is that we've already reached one of the final targets we had previously set. In fact, it was one of the last targets from our previous analysis. Starting now, we'll begin calculating new projections. But what really matters is understanding that after reaching this last target at 6,385, which was related to a Fibonacci target, price has struggled to keep pushing higher. Following that, we saw a sharp drop, largely driven by reports released on Friday that were closely tied to ongoing tensions between the US and Russia, and especially concerns over tariffs. That's why the S&P 500 has experienced a very notable pullback. What we need to evaluate from this point forward is whether this bearish move has enough strength to continue. If it does, the downside targets should be monitoring include several key zones. The first is located here in this vacuum block at $6,261, and after that we have another level at $6,212, which could be tested as a liquidity zone. Farther down on the 4-hour chart, we have another liquidity gap, or also known as vacuum block, with a potential reaction at 6,044, and from there we could talk about a larger liquidity zone which is located here at 5,943 should the S&P 500 continue trending lower. On the bullish side, if the index resumes upward momentum, the first target would be to retest the recent high near 6,427, followed by 6,475 level. And finally, based on the latest price swing, which represents 125% of the most recent move, so this price should be considered as a relevant objective in this bullish scenario for the S&P 500. Now looking at the EURUSD, we have a slightly more complex scenario. We've seen a solid upward move here, which was supported by volume, as we can see here. But the main challenge lies in determining whether that bullish volume can actually be sustained. If it does hold, the euro-dollar pair could continue its upward trajectory. In a bullish scenario for EURUSD, we should consider several key targets. I like to focus here on the fair value gaps or imbalances we can see here in all these points. And the first high probability target will be around 1.16 228, and a second potential reaction zone could be found near 1.17152 due to the presence of another imbalance in that region. If bullish momentum continues, a more extended target would be 1.17889, and finally the area near 1.18299 would serve as a maximum objective for this upward leg. However, this scenario would likely require the US dollar to experience a much deeper decline. If that doesn't happen, it will probably be very difficult for the euro to maintain this bullish momentum. We wrap up our asset analysis with Bitcoin, one of the markets we actively trade and monitor. Last week, we highlighted this zone, which was related to the fair value gap on the 4-hour chart that Bitcoin left in the past. So we considered this as a key zone where price could potentially bounce, and we've now reached that area. From there, we've seen a bullish rebound. But now the question is whether we can take new positions at this stage. Looking at the 4-hour chart, we are currently seeing a pullback in all this movement, and if this correction ends up breaking the most recent low located here at 111,900, then it's likely we could see further downside movement. On the other hand, if the price holds above that key level, the most probable scenario is a bullish continuation aimed at targeting higher liquidity zones. In that case, we can start to set bullish targets. The first zone would be around 115,756, followed by the imbalance area near 116,393, and a more extended target could be $117,380. And if bullish momentum really picks up, then the $120,000 level becomes a realistic upside objective for Bitcoin. If you found this analysis useful, don't forget to hit the like button and subscribe for more weekly insights. And if you want to start trading with a reliable and professional broker, head over to xChief.com and open your account today. See you in the next video.